So welcome to the virtual launch of Mobey Forum's latest infographic, Payment is Not Just a Payment. Mobey Forum's payment expert group has built an interactive infographic to provide a clear and practical comparison of card-based and account-based payments. And the infographic illustrates the benefits, challenges, and operational characteristics of each of these payment rails. And this will be at the center of today's discussion. We will go through the infographic and some case studies with the expert group chairs. Just a quick word about the expert group, because we have a few people who might not be Mobey members and might not know the expert group so well. So this group consists of practitioners from our member organizations. And in the payments expert group, we've had participants from organizations such as Nordea, Bizum, Visa, Bank Accept, Este. I think there's someone with a microphone on, so if you can mute while you're not speaking so that we can minimize the background noise. Yes, so in this payments expert group has consisted of different people from our member organizations. So payment experts from organizations such as Nordea, Bizum, Visa, Bank Accept, Este, Raiffeisen Bank International, Post Finance, and many others. And so the conclusions and insights in this infographic, apart from, of course, the case studies, are not of any specific organization, but rather a result of discussion between the group members. And I'll just go through a couple of quick housekeeping items before I hand over to the chairs of the expert group. As I mentioned, our audience today does not consist exclusively of Mobey members, so this webinar does not take place under the Chatham House rule, which we usually abide by. And this session will be recorded and made available to Mobey members as well as the broader industry. All questions and comments are, of course, very much encouraged. These make the session all the more interesting, and we will reserve time at the end for questions. So if you do have a question, please raise your hand or write your question in the chat, and we'll read it out loud at the end. And please turn off your camera and mute your microphone when you're not speaking so that we can minimize the background noise. And with that, let me introduce you to our speakers today. So we have our three expert group chairs, Jukka Yliuntinen from G+D Netcetera, Ville Sointu from Nordea, and Pål Krogdahl from Samlink, and a couple of special guests that the chairs will introduce later on. So please take it away, chairs.
Okay, maybe me first. So very good afternoon, everyone, also from my side. I think, Elina, you covered pretty much what I was supposed to cover, but never mind. Just like you heard, so in the payment expert group, there is now this new infographics available, and we have our chairs here, so myself, but especially Ville and Pål. So Pål Krogdahl from Samlink and Ville Sointu from Nordea, and they have led this work, and they will walk us through then on the key findings and the perspective. So maybe just on the other speakers and the guests that we have, so introducing them here already. So we have a little bit the kind of a fireside chat type of discussion later. So we have Alicia Fernandez-Sarion from Bizum, and we have Björn Kjellbred from Stu representing the Bank Accept. So, and they will share then their views and the real world experiences on different payment ecosystems, and here namely, of course, account to account and the cards. Basically with this, I hand over to you, Pål and Ville, to take it forward.
Wonderful, thank you very much. And I will let you, Ville, kick off. Maybe you can give a little bit of a quick summary and history of the payments group, and then how we ended up selecting this specific activity for our latest piece of work.
Of course, and thank you. So I'm Ville, as mentioned already. I'm one of the co-chairs of the payments expert group. I've been as a co-chair of the payment expert group for now, how long, Pål? 2 years, I think, and been involved with 2 papers or 2 publications, including this one. The previous topic that the payments expert group did was around embedded finance. We basically did 2 publications around embedded finance or embedded payments, and we felt that it was time to do something different. There was also an option on the table for us to continue on that topic, and indeed that topic would have kind of been able to cover for the rest of our lives if we wanted to, being a very interesting and deep topic, but we felt that we might want to do something different. The Payments Expert Group has been around since pretty much the beginning of Mobey Forum, and that means we have a lot of kind of legacy burden on our hands because we have to maintain the high quality of publications that we do, and also make sure that we involve the community as much as possible when we do this work within the expert group. After all, the point is not to be the voice of the co-chairs or indeed a single company, for example, but we want the broad industry perspective always to be reflected in everything that we do or produce out of the expert group. And with this background in mind, so we had the embedded finance topic, we had the long history of the Payments Expert Group, and the need to listen to what our members are wanting, and also what are they also willing to contribute towards. We landed on the topic that we're going to be talking about today. So that topic is the headline of the paper or the publication, which the payment is not just a payment. And effectively, we talk about the comparison between existing card rails and emerging and existing account-to-account rails. How did we end up here? So the first time we talked about the topic of the next paper or the next publication was in Vienna. We basically floated around the expert group meeting in Vienna the idea that basically collecting different ideas, and very quickly we narrowed it down to two or three different options on what they could be, and clearly we saw that there was a strong need from the community to talk about account-to-account payments, and specifically around what they are not and what they do differently from existing options. We landed with the name "Payment is not a payment" quite quickly because it sounded very kind of interesting, and we set off to do the work. Paul, you need to remind me, how long did we actually use to do this paper? I think we spent almost like a year getting this done.
I think we've closed in on close to a year. Yes, from initial idea to the working sessions and then the fine tuning. Yes, it's been 11 months or so.
Yes, exactly. And as usual with the trajectory of doing these publications, we start with a very small set of things and a small amount of inputs, and then suddenly we realize we have so much data and so much input coming in that we need to start to narrow it down. So it goes in a very kind of predictable way as always. And I kid you not when I say that I think halfway through, when we had collected a massive Excel matrix with so much data that nobody was able to understand it, I think some people might have even lost faith that we can ever produce anything out of this work. But lo and behold, we landed in something that we think is very useful, very easy to understand, and hopefully useful for the industry broader as well. And this is the way we want to work in the future in the Payments Expert Group as well. We want to get as much input as possible so that we're able to distill that into something that we can all agree is the consensus of what we think is the industry view into a specific topic. Finally, before we move into the actual content itself, I just want to say that the reason why we as chairs also wanted to work with this specific topic of card versus account-to-account payment, or comparing the two, is that it's one of these topics where there is so many legends, urban legends, things that are being said on conference stages that are said as truths. And then when you actually dig down to it, there's so much more nuance into any of those claims. And in this case, the claim is that account-to-account automatically reduces the amount of intermediaries. It reduces the amount and simplifies the process without somehow basically getting a simpler, cheaper process without losing anything in value. And this is not true. It might be true for some account-to-account schemes, but it's definitely not true if we are only talking about a simple account transfer. We know that the card systems produce a lot of extra services and security around payment transactions. And this was the kind of the offset of where we started from, basically saying that we need to surface these things without saying which one is better or which one is going to be dominant in the future. We just want to put the facts on the table to say These are the differences between typical account-to-account payments and card payments in order to move forward with the dialogue from these kind of broad assumptions that we hear on conference stages into actually something more productive in terms of industry conversation. So with that background, we can move, I guess, to the actual topic or the content of today's session, which is the actual infographic itself. We want to go through the infographic now, and we encourage people to, of course, think about questions if you have any along the way. You can type them in the chat, and we will take them in the end, or we will save 10-15 minutes in the end for us to have a conversation if you want to be talking instead of typing, for example. But with those housekeeping things said, I think, Paul, we can move on to the infographic, right?
We can do indeed. I just wanted to add one small thing, Ville, to what you said around the urban legends and everything else, and what you get with account-to-account versus card. Another element that we also wanted to try and bring out, which we maybe didn't do as strongly as we could have done, is very often in our community, we very often look at this from a industry perspective, very much looking at it from, are you an acquirer, are you a merchant, are you a bank, are you a financial institution, are you a PSP, etc. And sometimes we forget the fact that there's a consumer on the other end. There is a user, there is an individual, there is a human being that maybe doesn't understand from their perspective the difference between what happens between me paying or using account-to-account versus a credit card or a debit card. And we wanted to try and bring this out as well. Things like consumer protection and other elements. What happens when things unfortunately go wrong, and where does the boundaries lie? But with that, absolutely right, Ville, let me bring up and share the work that we've done. One of the things that's also quite exciting for us is that this is, whilst it is an infographic, it is not the traditional static infographic on a piece of paper. It is digital, it's interactive. It is a snapshot in time. It's based on the analysis and the work that we have done with the expert group over the last 11 months or so. And this is a very dynamic area, particularly when you look at account to account. So things are changing. We've already shared some of this work internally and had some initial feedback. And because things have moved on, there are already questions coming back or points of view coming back saying, well, maybe things have changed. So one of the things that we will look at along with Elina and the wider Mobey Forum is whether we see this as something that becomes more of a living deliverable, a living beast, where we will look to maintain it and update it on an ongoing basis within reason. We don't want to end up in a world where we are trying to update this on an ongoing daily basis. But this is the infographic that we created. I will walk through it with you. I will use Ville for some input in certain places. We will do it more as a shared discussion. So Ville, please jump in whenever you feel like adding something of relevance.
Yep. Maybe I can do that. Maybe I can do it right away.
Yes.
Because I already see comments coming into the chat as well with regards to what is the definition of an account-to-account payment and what is actually in there.
Yes.
And this was in the core of a lot of the discussions that we had. Because if you take one account-to-account scheme or another account-to-account scheme, there are differences between them as well. You cannot put all the account-to-account schemes in the exact same bucket. So, for example, now that we're going to be walking through the infograph, you will see some things and you will object, say that I know this account-to-account scheme that actually works differently. That is true. So again, this is the kind of consensus middle way that we see the typical account-to-account schemes working differently perhaps from card payments. And we can add infinite amount of nuance here as well. On the card side, there's different kinds of cards with different kinds of properties, not just debit and credit cards like we're describing here, but we had to do some kind of scoping exercises here as well on both sides. So we had to have not a million different account-to-account schemes and not a million different card schemes. So we kind of wanted to have the middle road options. So I hope you will understand that this is not the full truth, universal truth always. These are the typical differences that we're going to be talking about now.
Absolutely, and that's back to the spreadsheet that Ville talked about. We have got a humongous spreadsheet that ended up being very big, looking at all of the different dimensions. We had to narrow it down. And back to what Ville said, right in the middle of our screen here, we can see the definition for card payments and the definition for account to account that we used to drive our analysis and the conclusions we came to. And some example vendors. So for card payments, you can see Visa, MasterCard, etc. And for account to account, UPI, Bizum. We have got Bizum with us here today that are going to help us with a little bit of extra input. I'm one of these people that like dark mode. If you like viewing things in light mode, we've got the typical switch up here. You can see in light mode, I tend to find that it glares in my glasses a bit too much, so I will run it in dark mode. But as you play with this yourselves, you can change that if you want. So the first part is the introduction. We've got an introduction section here that gives a quick highlight of this study. It gives you a definition of what we mean by card payments and account to account, and some of the sort of high-level questions that we started off with as we went through this study. All of the work we did are culminated into a, can I call it a railway line map that looks like this. Ville and I, very, very influenced by the London Underground, maybe because we've had painful experiences of working in London for too long. But this is what we ended up with. You can see that we have got the three different card types. You've got credit card, debit card, and account to account. You can turn these off. For instance, if you only want to look at debit card, you only want to look at debit card and credit card, or all three of them. You can also make some other selections and changes here depending upon what area you're most focused on. But let me give you a quick high-level overview of the journey map here. So we've identified the life cycle of payments when we're looking at account to credit card across what we are calling 4 zones. The first zone being, as it says up here, onboarding and issuing. Second zone being initiation, third zone being processing, and then the last zone being post-processing. When we did this work, there were actually more areas, but we wanted to bring it down to a usable amount of zones for this end-to-end journey. The second thing that we then have is for each of the lines, we've got what we're calling stations. These are where an activity is happening. So you can see right at the beginning, there's a common station for all 3 lines, which is onboarding and KYC. If you hover over one of the stations, you will get a little bit more information. You'll get a very quick definition of what we mean by onboarding and KYC in this case. You will see the actors associated with each of the lines. So you'll see that account holders, institutions, EMI or bank, in all cases here for debit, credit, and account to account. If we continue moving down through our journey map, you will see where it starts breaking up. So we're saying that the next stop is only for cards, not for account to account. And here we've got provisioning. So again, it gives you a quick summary of what we mean by provisioning, and then who are the actors associated with this in credit and debit. And obviously you can see account to account is sort of lined out. It's not relevant in this case. And the next station is open credit, which obviously is only relevant for credit cards. So you get very quickly here a sort of step down that brings you to a station only for credit card, and it all comes back together again for a station that covers all 3, being merchant onboarding. The other thing that we also...
Maybe a good time to comment here as well. So for example, we saw the second station on the line is provisioning. Now, we know that the card schemes have provisioning requirements. So there's very specific things that you need to do according to the scheme in order to provision these services and basically get the instrument in your hands. These are very well standardized. This very well might be in an account-to-account scheme as well. we just noticed that they're not in all of them. So again, in a matter of fact, they're not in most of them. So again, all of these stations that are not for account to account, they could be in the future, but at the moment we're trying to see the most simplified possible account to account process. And there we of course don't have a universal standard for provisioning, for example, and therefore we don't have a station for it. But this is the bare bones minimum account to account that we saw it together as a group, and it's a good example of our thinking when we made this.
Fantastic, good input, Ville. I will actually step through this station by station very, very quickly so that we can flow through the whole flow. Ville, feel free to interject with where you want to add some additional stuff. I will not go into great detail because we'll run out of time, but I will just talk through the stations as we have them from our assessment. So merchant onboarding, the next station is only for cards, which was merchant business setup. Again, a quick definition of what we meant. The next station for us is then all of them together again. It's payment integration. So this is around acquiring the setups, the POS, etc. The next station is then only for cards again. It's card payment certification. Next station for us within sort of onboarding and issuing is for account to account only, and it's account acceptance setup. We then get joined back together again for payment connectivity setup for all three lines. And then as a last stop with inside of onboarding and issuing, we've got payment capture setup for account to account.
I will make a note on the acceptance setup for account to account here. The reason why we very clearly wanted this to be a separate station is that with cards, there's very clear standards with EMV acceptance and all of the things that you need to do with the point of sale terminals, whereas account to account, they cannot use, for example, the kernels in NFC terminals for in-store payments. Therefore, they need updates on the terminals, and or they need to make business arrangements with the existing schemes in order to allow for those contactless payments, for example, to happen in-store. The reason why this is a clear separation from the card rails is, however, the fact that account to account always has to have specific arrangements to be accepted in these points of sale, especially for in-store. This is going to be an interesting thing to watch as well in the future, as we're going to see the digital euro bringing this kind of a open kernel, for example, for NFC payments for in-store payments in the Eurozone, which would allow private account-to-account schemes also to use that acceptance infrastructure in the future. We will see how that plays out, but it's definitely going to change the landscape completely, and it's going to be an interesting update to this schematic as well, perhaps in the future.
Fantastic, good input. Next station is then within side of initiation. It's for cards and it's card data transmission. We move on. The next station being account data transmission for account to account. And then we flow into three stations that are common for all three. You've got consent and SCA for all three lines, followed by pre-validation for all three lines, moving into risk and fraud controls for all three lines with inside of initiation. Then lastly, we've got a split off again, and cards have authorization as the final stop in the zone of initiation. I don't know, Ville, if there's any comments you want to make in this zone or?
Yeah, I think especially the authorization, and I think we're going to talk about this with Bizum very soon, is that the authorization is specific and standard to card payments. Most of the account-to-account payments at least start from a position where there is no separate authorization, and the settlement is expected to happen instantly from the initiation. Therefore, we don't have that stop on the account-to-account. But we know that many of the account-to-account schemes, especially when they move into in-store payments, have realized that they cannot live without a separate authorization message because the actual settlement takes multiple seconds. In the case of SEPA Instant, at least 10 seconds. So again, these are not acceptable for in-store scenarios, but looking forward to hearing maybe some Bizum's input into this discussion as well.
Absolutely, yes. Moving on to the next zone, which is processing. The first one is a station for account to account, which is build and route. I've had discussions, Ville, around this in other reviews. Wondering why it's coming here and not earlier. Do you want to make any input on this?
Yes, so the reason is because for what we just went through. So the separate authorization message, this means that the ISO message to initiate the payment needs to be constructed as part of the beginning part of the processing, because it's also part of the entire process. So the expectation on the account to account is that it will complete entirely without the separate authorization message here, and that's why we have it on this side. Obviously, you could have it on the other side as well, but we just landed here because we wanted to emphasize that point, that there is no separate separate authorization flow.
Wonderful. Next station is around cards again. It is payment processing. We then move to a joint station for all three, which is payment confirmation. Split up again, and we have a couple of stops only for cards. The first one being payment reconciliation. That is followed by clearing and then settlement. Then we have two stops for account to account. We've got initiate account transfer and then receive account transfer. The next one is then a stop for merchant settlement for the cards. Next stop, and here we get into what we are calling superstations. So these superstations, you'll see they've got a sort of dotted line around them. We're calling them partial or conditional. And the reason for that is because in certain stations, we have identified that there are things happening at the moment that will potentially have variations, particularly around account to account. So in this case, when we look at reporting, it really depends on the account to account, on the pending validation of the scheme that's being used. And we had quite a lot of discussions around some of these superstations, Ville, right?
Yes, we did.
Yes.
We did pull this into these superstations because they are so common, and there are clear similarities between these. So, but for example, the disputes handling in the kind of bare bones account to account, there is no dispute handling except what is being defined in the actual law, consumer protection law. So therefore, we couldn't separate that entirely, but we only wanted to have it partial here. So it's always this, how do you visualize these things without kind of completely messing things up? And I think this is a good compromise on that front as well.
Yeah. Next one is splitting up again to cards only. It's reconciliation. And then the last stop for processing is a station across all three, which is reconciliation with clearing. That then concludes the zone for processing, and we go into the last zone on our infographic, which is around post-processing. We've got a superstation here again for covering all three, which is exception handling. Again, for account to account, exception handling will be pending valid schemes being in use. And if used, then it's with the merchant acquirer. The next station again is dispute handling, as Ville just mentioned, as an example for a superstation where there's a variation depending around account to account. We then split up for another station only for cards, which is standards compliance. And then the final stations here for all three, AML compliance, followed by token lifecycle management. Next one is alias lifecycle management. And then the last one, which is joined for all of them, is around cross-border and FX. That then concludes the journey for debit cards and account to account, and we've got a final station for credit cards, which is around settlement of the credit. And that then concludes our end-to-end journey for all 3 lines through all 4 zones and all of the stations that we had identified.
Great. I want to address this as a question in the chat about sanction screening, and we have the sanction screening here under the AML compliance under post processing, but it's actually a good point that, for example, in bare bones SEPA instant, it has to be done before the money moves. So yeah, we could have a separate station for sanction screening as well. But yeah, it's one of these compromises that we have to do here, but it's still a very correct point to make.
Yeah, yes, absolutely. But moving on, we also have a section around the insights that we gathered from doing this work that you can read through. Looking at the time, what I'm really keen to get to is we asked for some case studies from 2 of our members. One is around account to account, which we got from Bism, and the other one for the card perspective from Bank Accept. And we've got them with us here today. So I think what would be fantastic to do, obviously, as individuals, you can go and read the full case studies. You press here and it will bring up the full case study that was written out for us. But there is a quick summary here as well. So what would be fantastic, I believe we've got Alicia from Bisum with us, and Björn is also with us. If they are muted, then maybe Alicia, if you wouldn't mind just talking us very quickly through your case study to share your input on the journey for account to account.
Great, so thank you. From our side, I would say the main information we want to share in this case study is the difference we have from card payments. And I think that there are some questions in the comments that address them. So one of them would be that account-to-account schemes or the rails are made for basic or simple transfer. So account-to-account schemes such as Bizum need to build on top of these like basic rails a lot of regulation to be sure that we are able to comply with the requirements that merchants need and to cover different use cases more than P2P, which at the end I would say is the easiest one technically speaking. So I think that's something really important to highlight, that account-to-account schemes such as Bizum have a wide set of rules for dispute management, liability. Also, as you mentioned, I think during the infographic bill, to also adapt to the times that POS transactions need, that at the end need to be shorter than an instant transfer would be normally. So we need to do a lot of work in there to kind of standardize and create a set of rules for all the players. And I think also something important that is highlighted in the case study is that account-to-account is a push payment, not a pull payment. So we have different regulation here, and we are not able to do some capabilities such as, for example, MIT transactions, pre-authorizations, and all of these features that are essential for merchant payments. So we also need to do a lot of work to build them in our scheme rules and to have them covered in the regulation, which will come in the PSR, but also not in full. So I would say, even though we are a payment method that is rising and there's an opportunity here, there's still a lot of work to do from the schemes and also from the regulators to be sure that we are able to cover all the merchants' needs and also all the users' needs.
Wonderful. Thank you very, very much. I don't know if there's any questions by anyone to Bisum. I think now is please put your hand up or unmute yourself. You can ask your questions before we move on to Bank Accept. If there is any questions. I can't see the written questions, I'm afraid, because I'm sharing.
Nothing specific to Bisum at the moment. So
nothing specific. Okay, Björn, are you with us?
I'm with you. Yes.
Wonderful.
First of all, Paul and Ville, thanks for great work here. I think this is a great way to present something as complex as this. Well, not only for this audience, the payment geeks, but also for the stakeholders and decision makers, to make it a bit clear what this is about, because these are buzzwords everywhere. But we need to take some decisions for the future. So I think it's a great way to actually educate people as well around us. So that said, I will leave actually the floor to Joseph Mones, who actually made the case study here and describe a bit what we are doing with the card scheme in this for this purpose.
Yeah. So so to summarize with our case, first idea that we wanted to convey is something that Ville has stated numerous times, that there's a lot of diversity when we're talking about account-to-account, what we mean, especially if we are considering the overlay layer. And I think that from the simplest solution to solutions as feature rich as Visum has, there's a huge range, no? And Visum shows that. In cards, we also have some diversity, but much less, because it has converged over the years through similar business models, similar setups, and similar technologies. No, it's a fruit of that maturity that cars have over the market. Ourselves, Bank actually, are example of that diversity, because being a domestic scheme based in Norway, that we are doing only debit transactions, and actually at the infrastructural level we are using an infrastructure that is shared with account-to-account, and we even have equated card to account in a way that we use the account as an identifier for some of our use cases. So we think that some of the differences that we are discussing are product of a different feature set, maturity over time, and reach, and that will actually converge. So I would say in some way that sometimes when we are comparing cars on account-to-account, we are actually comparing European schemes, European solutions, and international solutions sometimes in our head. So that would be one of the points that we have. But of course, another point is that product of that experience, or that history of evolution of the more maturity of the car schemes. So there are some expectations on that. So, for example, what functionality needs to be delivered in some of the edge cases, or about the robustness on the availability of the services, operational qualities, and things like that may differ a bit. So I think that's mainly the main difference that we try to highlight in our case study.
Fantastic, thank you. It actually brings up an interesting question, sort of to both of you. Be interested to see your views, particularly from if we think about the consumer's perspective, and you mentioned the debit card being the focus for you as a Norwegian scheme rather than credit cards. When we look at debit cards and account-to-account payments, do we think that the lines will continue to get blurry for consumers to a point where it will become at a point where the consumer won't notice or won't care, and no one will realize whether they're actually using debit or account-to-account?
From our perspective, I would say that the key here is the user experience that the customer has. So, for example, in our case, Visum is based on the phone number as the proxy. So as a customer, you know that you are paying with your phone number and then with your account. So I think that there's a big difference in the user experience when paying with a debit card, even though at the end, regarding the settlement and the funds, is pretty much the same as they are debited at the moment. But I would say that the user experience will be the key here to ensure that the customer knows with which instrument he is paying. So that's the perspective we have on this topic.
And from our perspective, so we see as payments are experienced more and more through wallets. In Norway, we are already beyond the 30% of use of wallets as a form factor. So in our perspective, as the wallet use increases, and we expect that to increase a lot, and at some moment the physical card, we expect it to be the residual form factor, then we think that the wallet is what actually is defining more the user experience, and not so much maybe the rails and underneath. So we do see that there's a convergence. So of course, at this moment now, there's some differences on whether it's more experienced by physical card or by wallets. That's what end users maybe experience, but over the time, we think that wallets will define the experience.
I would like to add one thing, because I think we share something, cards and account, debit cards at least, is a strong link to your current account. And this is something we know our banks, our owners are really concerned about, losing that kind of relevance in the consumer's life. Because we see, of course, all of us see new entrants now, which are challenging the existing incumbent banks and actually moving the deposits to kind of new banks and so on. So I think strengthening the daily life of the current account is a very important thing for us, both an account and a debit card scheme.
Absolutely. Any questions or perspectives from you, Ville?
Yeah. One of the things that we didn't discuss much actually in the infograph, but we did discuss it in the expert group, is the merchant perspective, because the merchant preference drives the adoption of any new payment method when you introduce it. So would like to hear both from Bizum and BankAccept. I mean, how do you convince the merchants? What is the merchant view? Why would they choose your payment method over another one, for example? And how is the current landscape looking in your markets in terms of merchant preference for payment methods?
So in our case, I think the user experience was a key argument for convincing the merchants to implement Bizum. At the end, we were offering a very easy way to pay for their users, and also a business model. Again, I think with account-to-account payments, there's more room for acquirers to be able to create a sustainable business model for merchants, and that has been another driver. Currently, in our case, focusing on e-commerce, which is the use case we have more mature in the merchants space, Bizum tends to be around 20-30% of the payment share, which we are pretty happy with that being a really young payment method. And then we are also now working on developing Bizum for POS payments, for in-store payments. And we are seeing here a lot of push from the merchants. So they are the ones that are asking their banks for this service. I would say mainly based on cost at the end, on the business model. But also I think that thanks to the brand we have built, there's also a need or a want or desire from the merchants to accept this payment method. So hopefully we can update you in a couple of months about this rollout, but we are seeing now that merchants are really demanding it.
So Ville, this is a great and a very big question. And we're trying to figure out how to respond to this. And I think there's a big transition going on. That's one thing. And the other thing is that merchants are different by segment, really different. In terms of tier ones, mainly focusing on in-store, in terms of the ones going really for omnichannel, and then you have the long tail and so on. They have quite different views upon this and quite different kind of requirements for us as well. So if you're a big corporation, for instance, you are really focusing on cash management, on treasury. So you want to have, liquidity being sorted out all the time. By that, you will require real-time payments, for instance. So you know that you have everything in order. For smaller customers, you're perhaps much more concerned about, I want one simple solution. I want to call one guy who is going to handle it all for us. So it's a very different perspective. And then again, you have the omnichannels, and they also want to see, cross e-com, cross in-store, one kind of view upon the consumers, not different views. I want to see that one consumer, even if it's online or in-store or whatever. So I think it's very important for us to understand the drivers for the various segments and try to respond to their requirements.
Great.
Wonderful.
Thank you.
Okay, moving on to the end. Just what I'd like to do is bring this up to say thank you very much to everybody that's helped and contributed towards this. You can see a full list of the contributors. You can see the companies, you can see the people. It's been a true team effort to get all of this put together. An awful lot of thought leaders and contributors. So thank you very much for that. As an ending, before we go into general questions in the time we've got left, Ville, do you want to? What's your perspective here? What's the conclusions that we've drawn out of this?
Maybe if we can connect the premise where we started from and where we ended, because we wanted to bring out differences between account to account. Especially, we wanted to talk about this notion of we are reducing intermediaries. We're doing direct payments with account to account. It's going to be cheap, if not completely free. The question, therefore, that is being raised from that is that when you take away a role and an intermediary in the payment process, what is that intermediary doing? What are you actually giving up? And who's going to do those things if not that intermediary? Or are you going to completely ignore those specific activities? So with this in mind, we kind of went through this, and I think we were able to bring out the critical differences that we saw, at least during this process. On the other hand, we also had one point in time during this work, we realized that are we actually going to be converging? So when we started talking about the more advanced account-to-account schemes, and they start to implement more and more of the exact same services as cards have today, are we going to end up with just 3 parallel lines that don't differ at all in this process? And that very well might be. And again, that's going to be an interesting future to look forward to, is that if those converge and we end up in a very similar model as we have with cards, then what was the point to begin with? But again, these are interesting discussions. At least for now, we can say that we do have clear differences, and this is something to work on as an industry moving forward, as well as kind of a basis of understanding where we are today. So I think that was my conclusion. We did find the differences, but we also see the direction towards convergence, and that's going to be an interesting next step as well as we move forward in this development of account-to-account schemes specifically.
I think I would agree with you, particularly if you look at debit cards with account-to-account or debit cards versus account-to-account. I think we're going to see an awful lot of mergence happening there. Credit card might continue on a slightly different track. The other thing that I reflected on quite substantially, particularly looking at the journey we've gone through, is that very much when you're talking about is payment just a payment, the devil is definitely in the details. That the more we collected, the more we noticed that there were separations at a very, very high level. Yes, payments is a payment is a payment. It was as we started digging deeper and deeper and getting into more and more of the variations and differentiations, we suddenly started to realize how they differ, and in some areas quite substantially do differ. The problem was, how do we get all of this to be reflected back into an infographic that's usable by anyone and everyone, rather than something that became very, very detailed and difficult to interpret. So I hope we managed to get to a balanced view. There is always elements open for interpretation, and this is a moving target. So things will continue to change. But I will stop sharing now and open up. And for the last remaining 10 minutes, we can deal with whatever questions there might be from everybody who's attending.
There is one from Boo.
Yep.
So please, Boo, go ahead.
Thank you. Stellar work. 25 years ago, when we established the Mobey Forum, we didn't perhaps quite expect this kind of quality to continue flowing in here, and I'm really, really impressed. The next steps, I have 6 points here that I will run through very quickly. User experience, absolutely very important when we are going one way or the other way. Then another question that you may have not touched too much upon is obviously that which method will help automation more. We have the ancient payment references in Finland that were invented long before Mobey Forum even, that have been very good for automation of payments into bookkeeping and so forth. So that's one aspect, which one is better there. Then we have the e-receipts, the proof of purchase. Obviously that is something that will be very important for the wallets in the EU schemes. And we know that basically if the European Commission doesn't fall flat on its face, most businesses will have the wallets and they can issue the receipts for card payments, but that is also needed for account payments. That has not been much touched upon. I'm not going to ask anything about agentic payments because that is very much about credentials as well. A final point, obviously, is the semantic interoperability. Which one is best when it comes to improving semantic interoperability needed by deeper automation? Thank you.
From my perspective, fantastically good questions. I think those are some detailed elements that could flow out of this infographic, maybe some of them too detailed for the infographic. But one of the things that we've considered and discussed is actually making the detailed spreadsheet. We need to tidy it up a little bit more, but making that available as a link from the infographic for people who really want to get down into the nitty-gritties and the dirty stuff of what we did during the analysis. And some of those things should be added to that, Pål. Absolutely.
Thank you.
Yeah, and I'll make 2 points, hopefully addressing many of the questions and points you made, Pål. Thanks for those good points. First of all, regarding the automation of payments, making things easier, especially for businesses when it comes to payment handling. The focus of this infographic was retail payments. So basically consumer to merchant payments, consumer to business payments, and that kind of limited the scope nicely for us as well. So we took out business to business payments. We took a lot of complexity out because we wanted to keep it focused in order to actually deliver something. But that being said, one of the interesting discussions with regards to this was that we encountered during this journey was that a lot of the industry narrative around account to account and instant payments is that it's a great feature that the merchants will get paid immediately into their account. This is true for very small merchants and a handful of medium-sized merchants, but for most merchants who process a lot of payments on day-to-day basis, that's the last thing they want. They actually are very happy getting, as long as they get paid at the end of the day, for example, they're very happy, and their existing systems are not able to support instant by default. So again, while the instant transformation might happen, it's going to take time, not only for the banks and payment institutions to actually implement this, but also for the merchants to update their systems to accept and be able to handle instant more effectively. And this is sometimes forgotten in this discussion about move to instant. And indeed, the smaller merchant you are, of course, that is a less relevant discussion, but especially for the larger supermarkets, it's a very, very valid one. But yeah, that's part of the automation journey, and that also means that the automation needs to go all the way. It doesn't help if only the banks are working on it. The second point, which relates to the e-receipts and furthermore any type of kind of contextual extra metadata stuff that would be happening around these payment transactions, I think that's a very fascinating area. We consciously made the decision to focus on the real core payment process, so basically the L1 level of data handling here. And e-receipts has been a thing that has been discussed since, well, ever since we started talking about digital payments. I think we would also be discussing how can we also digitalize the receipts. And there's a lot of different ways this can be done. And we're starting to see some implementations happening as islands in absence of a standard to make that happen. But that is the kind of the first, almost like a legacy automatic step for contextual data for payment transactions, which makes them more smart. And you can extend that discussion to even more interesting things, like, for example, identity. So if you have like age-gated transactions, are you able to provide have a proof of age, a verified age of proof of age as part of the payment transaction in order to authorize, for example, things like buying prescription medication from pharmacies online? So these kind of extra data layers on the payment transactions is definitely something that we will probably focus on in the expert group as well in the future. But we noticed this as part of the work, but we scoped it out. But that doesn't make it any less interesting for future publications, perhaps. And yeah, maybe that's a good way to also say that we are now open to discussion about what is the next publication going to be, and we're going to be talking about that in the next member meeting. But hopefully this at least partially answered your questions.
Wonderful. Any other questions in the time we've got remaining? No other questions. Okay. The link to the there is Mia. You've got a question, I can see.
Sorry. I was just looking at the sort of introduction, and I was just thinking about it because there it's kind of highlighting that account to account doesn't really have the scheme rules, but isn't it so that each of the account to accounts basically have their rules set anyway written that needs to be followed, whoever is going to be utilizing the account to account scheme? I mean, or how do you see it differently, that it's not a scheme as such? Because to me, I mean, if it's Bisum, if it's Siirto, if it's bank accept, if it's whatever account to account payment method, there are kind of scheme rules to them as well, even though they are not the Visas and MasterCards. But
this was one of the big things that we went round and round and round on, and even Ville and I, as we were closing in on getting the infographic completed. And that's one of the reasons why we have those superstations that say that the answer for account to account is maybe, dependent upon scheme, etc. So we realized that there were some gray areas, but we had to put a stake in the ground and say that based upon the point of view we've got at the moment, at the time of publishing, if we can say that, this was our position. But we know that this is a moving target.
Yeah, and I think it evolves, every day, of course. Yeah. Then I also had another question, but now it slipped my mind, but I will think about it. And if I can't think about it by the end of the session, I will reach out to you too. Thank you.
Please do.
Okay, wonderful. And with you saying that, we've got 2 minutes left. We're keeping everybody to the schedule. The link to the infographic has been shared in the chat, and it will be shared everywhere by everyone on LinkedIn and everything else afterwards. We would love feedback and comments on this, because we want to see that it's being used, and we want to see that people are getting value from this. And any good feedback that comes back, like I said, we would seek to potentially update the infographic. But I want to be kind and leave the final words to Jukka.
Well, thank you very much, Paul and Ville, and especially to Alicia and Björn and Bank Accept team there. I mean, splendid session, in my opinion. And let me just use the last minute to advertise Mobey Forum. So, all this content is available for members. Now it's open here also for non-members. I see that there are a lot of members here, but also some non-members. So you are most welcome to join Mobey Forum. I mean, it's value for the money, and the most of the value really sits here in the expert group. So you can participate in this ideation, discussion, and finally really to the conclusions, which we share happily to the whole community. But this is the open invite, and definitely a recommendation also from our side. So, and with this, I would like to thank you everybody for joining, and I think Paul, Ville, Elina, and all will join this